prices shatters $5,000 ceiling with analysts eyeing massive revenue boost for Ghana. We ask, in the market of price volatility, what can Ghana do to maximize revenue from mineral resources? Details of this and more coming up shortly. As always, Business Focus is sponsored by Telecel as well as Ecobank, and we do have a guest lined up for you to discuss our topic for today. But then let's turn our attention quickly now to the currency and the commodities market. But before we do that, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember: *770#. Yes, *770# is the new Ecobank Money emergency number. *770# gives you instant access to loans, fund transfer, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. Ecobank will always come to your rescue. So dial *770# now for solutions to your money emergencies. Ecobank, the Pan-African Bank. We'll turn our attention quickly now to the currency and the commodities market, as well as the treasury bill front, and bring you updates. And on the foreign exchange front, the dollar currently will be bought from you at 10 cedis 89 pesos, sold to you at 10 cedis 90 pesos. The pound will be bought from you at 14 cedis 93 pesos, sold to you at 14 cedis 94 pesos. The euro will be bought from you at 12 cedis 95 pesos, but sold to you at 12 cedis 95 pesos. But we guided that these figures will be much higher at a forex bureau near you. Then we'll turn our attention to the global commodity front, where the price of cocoa is up by $124. It's trading at $4,325 per ton. Gold is also up. The interesting one we'll be discussing extensively today on the show is up by $106. It's trading at $5,994 per ounce. A record amount, first time ever in history that gold has reached and exceeded the $5,000 mark. But what does that mean for Ghana? We'll dive into that shortly. And crude oil is at $65.68 per barrel. It's lost some 20 cents. And we turn our attention to the treasury bill front, where the 91-day bill is at 11.19%, 182-day bill is going for 12.66%, 364-day bill is at 13.06%. And we do know that government has again hit another oversubscription by over 60% actually. And some would say probably expected, especially with inflation now single digit, somewhere around 5%. Given a very significant spread, especially when you judge it against the 91-day bill, that's about 11.19%, give you an excess of about 6% spread over there. Interesting numbers. We'll see how all of that pans out in the next couple of days. But this is Business Focus on TV3. We'll go for a quick break. When we come back, we'll delve into our topic. Stay tuned. to remember, star 770 hash. Yes, star 770 hash is a new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank, and proud sponsor of Business Focus as well as Telecel. Now to our topic for today, we'll start off with the cedi. Now the local currency, the cedi, has projected a stellar outlook for the Ghana cedi, forecasting a 42% appreciation against major trading currencies by the end of 2026. This optimistic projection suggests that the local currency is poised to outpace its historic 40.7% gain in 2025, a year in which the cedi was ranked by the IMF and Bloomberg as the best performing currency in Africa. Now, in a historic turn for global commodities, the price of gold has officially shattered the $5,000 per ounce barrier, trading at an all-time high of $5,104 as of Monday morning. For Ghana, now firmly established as Africa's leading gold producer, this milestone presents a monumental revenue opportunity, but also a test of its economic resilience against market volatility. Now, joining us for the discussion tonight are financial economists from the University of Professional Studies, Accra, Dr. Eric Boakye-Yadom, and finance and tax analyst Nelson Kudjo Kwakwenjin. Gentlemen, thank you so much for your time.
Yeah, thank you very much for having me.
All right, so your initial comments on, I think at least at this point it was expected that looking at the rally the currency undertook last year, that it's no news that's the best performing currency on the continent.
Yeah, sure, certainly. I mean, and you can actually attribute the performance to confluence of factors. I mean, a domestic policy review by the government and the external sector plays a crucial role in the appreciation of the cedi. If you recall that we started the year when the cedi was depreciating at a rate of about 20%. And at the same time, a dollar to the cedi was around 14.70 Ghana cedis. But today, that is way lower today. And as I said, this is largely attributable to policy intervention that the government has implemented during the course of the year. And of course, the external factor also plays a crucial role towards the stability of the Ghana cedi. So it's not surprising at all that the Ghana cedi is actually the best performing currency in Africa.
Interesting. Dr. Boakye-Yadom, do you share similar sentiments?
I agree in part that the cedi has gained momentum from the beginning of last year to this period, and thankfully the external factors has played to our favor. We know U.S. is not doing so well. The countries around the globe, especially in Africa here, those that have structured their economy in a way, waiting for good times like this, are taking advantage of the global economic situation. So I think largely we've done well as a country, and we hope that we're able to deepen what has been done. But I will always repeat and say again that usually bad times is a precursor to good times. In the same way, good times means that we should be getting ready for bad times. So we have a good time to be able to prepare for certain eventualities. So just like we had a conversation some time ago, that economic data or economic events are cyclical. It goes around and it comes around. So when you miss the opportunity to prepare for bad time, then you'll be surprised when it comes.
Interesting. And talking about external influences, the dollar for 2025 fell by about 9%. And we do know that this also has some spillover effect on an economy like ours that is heavily exposed to the dollar. But then some also argue that this issue of best performing currency is actually relative, because you are best performing because you've come from a very bad place to a relatively stable place. Do you side with that argument? Because, for instance, if an economy was, for instance, had strengthened its currency further as compared to ours, they relatively, in more real terms, have done better than we would have, considering how far off we've come from. What do you say to that?
It's basic in economics that poor countries have potential to grow faster. So anytime you are even, let me take you to class, we are modeling economic event. We will say that a country that is poor is likely to grow faster than a country which is rich. That is why countries like Guyana, in some time they grow in double digits. It does not mean that other developed countries are not growing, but relatively, you stand a chance. Just like comparing yourself with your child. Your child has the potential to grow, but you are already there. So your growth rate will not be as faster as when you compare yourself to your child. So it is a normal to see countries like Ghana claiming our currency being one of the best performing currency, because we are coming from somewhere negative growth to positive growth. So it is normal and it's expected.
It's expected. All right. Nelson, you are amongst those who are quite optimistic about this year when it comes to the local currency. You are confident that it could strengthen to as much as 42% this year.
Well,
what's the basis for that?
Well, so if you look at the underlying triggers, the underlying drivers of the performance of the cedi in 2025, those underlying factors are still with us. I mean, we are saying clearly that the performance of the cedi is as a result of domestic policy intervention by the government. If you recall, during 2025, the Bank of Ghana did very well in terms of their policy directive and their, intervention within the market. I recall at a point in time we were in this studio discussing as to whether the footprint of the Bank of Ghana within the market is that acceptable to the extent to which they are doing it, and to the extent that the IMF also raised an issue regarding the continuous intervention by the BOJ in the market. So clearly, you could see that last year, BOJ was very focused, very intentional, very directed towards the targets they intend to achieve. I mean, if you move inflation from all the way from 23.8% to about 5.4%, then that tells you that we have a central bank that is actually active in terms of its policy implementation and policy directives. I also recall last year, the Bank of Ghana issued a directive to the banks indicating that their cash reserve ratio should be based in the currency in which the deposit was mobilized. And so clearly the domestic policy interventions are still with us. You rightly mentioned that the external factor also plays a major role. Gold naturally is resistant to geopolitical tensions. And so most people consider gold as a safe haven in terms of investment. Now, we started 2025, gold was trading around $2,600 per ounce. We ended the year, gold was trading around $4,300 dollars per ounce. And today, gold is trading at spot, a little over $5,000. And there are even projections that going into the future, in the medium term, gold could be trading around $6,000 per ounce. So clearly, we believe that the cedi could perform the way it did in 2025. But looking at the percentage, I think we have to limit ourselves to about some 30 to 35% by the end of the year.
30 to 35%. Doc, what do you think? How far do you think the currency can go this year, judging by the speed it's taken off since 2025?
So if we want the cedi to do well, I think that we have to allow the market to operate. You look at our forest market, and our total import bill for a year as a country is around 25 billion. In 9 months, the Bank of Ghana intervened, ejected, or intermediated, whichever word we give to it, of about 10 billion. That is close to about 40% of what the market needs. So can we say that in times where the central bank don't have that enough money to inject or support or intermediate, are we going to be able to witness that level of stability? So we have a good opportunity to ensure that we support, especially exporters who are exporting non-traditional commodities, to be able to export more so that we can get the needed dollars and the market for importers, so that the market, even when we are supporting or we are intermediating, the value at that we intervene, we can reduce to about less about 20%, 10% gradually. I understand that economic events, there's supposed to be a trade-off, and the government should prioritize what is important. And prioritizing the city is good, but let's do it in a way that the market will control, be able to supply a huge portion or supply a huge portion of the dollars needed in the forest trading. In this year also, we are expecting the government to move into full swing of activities by implementing eight major policies. What will be its effect on inflation? Now, with the kind of inflation figures we are seeing from the Ghana Stock Exchange, I think we need to have a second look at those figures from the Ghana Stock Exchange. You actually will see that throughout the year, in nominal terms, the inflation fell by about 18%. Then in percentage terms, it's over 77%. And if what we have seen, you see, we are projected, or there's general indication that the city is going to strengthen around 40% or more. If inflation should go in that direction too, it means that by somewhere May, we should be expecting about a negative inflation. That is actually a deflation. I think although there is a substantial price drop, on the market, but the figures reported, I think, is largely high, and we may have to have a second look at it, because these things are going to inform central bank policies, to inform government policies. So if the figures are so huge and we take a decision that later come back to hurt us, I think it will not help. So let's be cautious in terms of trying to paint a good picture that things are good. I know things are getting better, but we are not there yet, and the government needs to slowly move us to where we wish we would be as a country.
Doc, isn't your point also assuming that disinflation is linear and will continue on that trajectory till we get to deflation? I'm struggling to understand that part.
I'm saying that looking at the trend, if last year, you see, we are looking at trends, and your first question was looking at the trends in the city, and I'm saying that if we are making that projection, that city is likely to do better, in terms of appreciating against the dollars compared to last year. Then, if we follow the trend of inflation, if inflation can fall by 18%, and we follow that same trajectory, we will be heading towards deflation or disinflation. The point is inflation can be static. We can record a consistent 5 cents throughout the year, But the trend is pointing to a certain direction. If the trend is true, or that's what it's supposed to be. So I'm just saying that we need to be very cautious in terms of the numbers, not what is happening in the actual market, because the market doesn't lie, but the numbers on which policies will be made, on the basis on which government will make policy. We should hasten slowly, in terms of the numbers we put out there.
Oh, okay, fair point. Nelson, you want to respond?
I agree with him that the numbers as analysts churn out will inform a certain level of policy intervention from the government. However, if you look at the trend of what we witnessed last year, if the underlying factors are still in existence, then we can also project and say that, well, the city will also perform within a certain band by the end of the year. Don't forget that if you look at the industrialization strategy that the government is intending to roll out, if you look at recently, they made mention of the palm nut development authority that is supposed to add value to, the palm nut that we produce in this country. And also, the gold ball jewelry adding value to, all these stuff. The expectation is that at the end of the day, if this policy intervention by government in terms of industrialization comes to fruition, what will happen is that we may rake in the necessary forex. And so the numbers, yes, we have to be cautious with the numbers we churn out. However, if the underlying, triggers are still with us, we can only base the projections on them and come up with certain figures that can inform policy decision.
But Doc, let me find out from you. Historically, how often have such a strong currency rebounds in emerging markets been sustained beyond 12 to 18 months? And really, what does the trick to elongate that strengthening?
So you have to look at the demand and supply of the currency that you need. Literally everything we need in this country is imported. Although we say that we have trade surplus, but it's coming from primary goods like gold and cocoa. So if the factories that the government is intending to set up, the 24-hour economy, the big push agenda, if they fail to deliver, I've realized that in every government, there's usually one particular policy that when it fails, everything goes off. So if the government is able to get it right to the point where we are able to produce some of these goods locally, we will cut our importation. When you cut your importation, you are saving money that dollars that you could have been sending outside. So establishing local factories is a good area, and ensuring that they work effectively is a good area of ensuring the sustainability or the stability of your currency. You see, what the Bank of Ghana is doing currently, it is good, and it has been practiced severally, trying to support your economy with the injection of dollars and all that. But it's up to a certain point, because the fundamentals of the economy, you cannot hold it forever. So I am hopeful that if the government is able to ensure that the policies put in place to establish more factories, to support local industries, like the gold jewelry that my brother talked about, if these things come upstream, then we ensure that we will be able to also export non-traditional commodity to earn some sort of dollars to supply to those that need it. If we don't go into that, we are only being optimistic that those things will work. But in case they don't work, then I think we don't have enough fundamentals to be able to sustain this gain for a long time. What the Bank of Ghana at best will do is to keep throwing more dollars to support the cedi, but it is up to a point to which you can save it.
But Doc, really, if you look at the indicators we are getting, especially from the global commodity front, we've seen a spike in gold. Cocoa is also doing pretty well. Crude oil is also not looking bad. All the major commodities are edging upwards, as against projections earlier from the World Bank they were going to dip. Don't these already put us in a good place to some extent?
So let's take cocoa. Now, cocoa, although is doing well, but our local farmers, we are not getting the value because dollar is not doing well. So there's a trade-off.
Okay.
We need to pay these cocoa farmers. We need to be able to support them for the next crop season. If we don't get so much money to support them, government may have to find, or they need to go and borrow the cocoa syndicated loan, or find a way to support farmers for the next crop season. That may even end up, if it delays or we don't get the needed investment, it may affect the next crop season, So,
but some also argue that, just a follow-up, that, well, on the other hand, if they don't get much, their purchasing power has to some extent increased. For instance, if you were spending 1,500 on fuel as at last year, beginning of last year, this year you are looking at somewhere around 1,000 cedis. So at least you have some more, for want of a better word, disposable income. So you are still in a good place anyway. Michael,
you see, one of the things we are losing sight is that I don't know who is not. I started talking about the figures, but I don't know who is. There's something we are missing.
Okay.
Prices generally have gone down, but it's not as much as it is on the practical market.
Okay.
For example, you take transport. Transport, like you are talking about fuel prices have dropped. But transport generally, the commuters, the general commuters are paying some. It's almost the same. And in some places, that's even gone up. So
Okay.
it is either the profiteering attitude of the Ghanaian is not making them reduce the prices, or the figures that we are getting, because even if they are not reducing the prices, the figures from the GSS, they take the practical figures from the market to compute the inflation figure and all that. It should reflect. So yes, you are saying that your income level will generally go up because inflation has gone down, but it's not what it seems generally when you go on the ground. So prices, you go and buy, let's say you go and buy beans or you go and buy rice. It is the same quantity they are giving to you. They've not reduced their prices.
Yeah.
Whatever you used to buy is the same thing that you are buying. So I am just saying that in every crop season, they need some amount of money to invest.
Yeah.
So if we don't take care and the cocoa farmers are not getting enough, that is where those who are far, that the monitoring, the patrol team cannot reach, they may, if they tend to find gold on their farms, they may end up going into Galamsey because gold price is doing well, as compared to cocoa. So we need to find a way to support the cocoa farmers so that they will not, their expectation in terms of revenue will not be low. For them to change their mind to use their cocoa farms and things for other businesses.
Okay. Very valid points there. You're still watching Business Focus here on TV3 with me, Michael Obodu. I still have my guest in studio, Nelson Kudjo-Kwaweji, finance and tax expert. Also joining us virtually is Dr. Egbache Yadom. He's with the University of Professional Studies Accra as a financial economist. We'll go for a quick break. When we come back, we'll continue the conversation. Please stay.
Panic, but if you are
Welcome back. This is Business Focus here on TV3 with me, Michael Obodo, and thank you for staying tuned to the network. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would always want to remember. Star 770 hash. Star 770 hash is the new EcoBank Money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, that Pan-African bank and proud sponsor of Business Focus as well as Telecel. We'll continue with our conversation on the CDA as well as the issue of the appreciation of gold, or the increase in the price of gold on the global market, where gold has now hit a record $5,000 per ton. Quite interesting one, per ounce rather. Doc, thank you so much for your time, for staying with us. We know in the early stages of this whole gold conversation, you were among those who raised concerns about the gold board, and you already projected that we run the risk of some losses. Where do you sit now with this whole conversation of the price of gold even going up further?
So, like I said earlier, it will strengthen our reserve, and we get to also have enough dollars to support our currency here. But the downside of it is, if the cedi is also doing so well, it's relative to the dollar and other currency. It makes us also less competitive because our price is going to be higher as compared to the domestic goods elsewhere. But the way out of this is mass production when you scale up. See, when you scale up and you're able to produce in large quantities, your prices, or you can reduce your price, and then it can also still be affordable.
Okay.
So we should not focus also so much on the positive aspects of what the hike in gold price will bring us, but the downside of it, and put in measures to possibly correct it. And if we don't do that, already we've stated that we are losing on the commodity side in terms of the dollars we are expecting to come in. The value is dipping. So I would say that the government should focus on using the Exim Bank as a conduit to support more indigenous producers to produce goods that meet international standard, to increase the volume of goods that we are exporting. All that I'm looking for is a forex market that can stand on its own with little support from the government. But the government participating close to 40%, I think it is too high. So the investment should be strategic. And it should go to those that will work with the money. You see, government usually have fantastic ideas, but when it comes to the implementation, that's where we usually get it wrong. So in rolling out the government agenda this year is offering us a very important milestone in our life as a country, and government should ensure he invests in strategic areas.
Okay. Nelson, you have spoken about the Bank of Ghana's intervention, its role in stabilizing the local currency. You've seen DOC also express concern about that level of intervention, up to 40%. Do you see that level of intervention happening again, especially looking at the stability we've chalked so far?
Well, for me, I've always been saying that I belong to that sect of group of people or analysts who always says that the intervention of the Bank of Ghana within the economy is grounded in law. I mean, if you read the Bank of Ghana Act, one of their mandates is to maintain currency stability, of course, price stability. And so to the extent that the intervention is yielding the needed result, for me, I don't have any problem with it. The only thing that I want to say is that the intervention must be done periodically as and when the need arises, but not continuously, because when it happens that way, we may not, at the end of the day, get the true value of our currency. I mean, if you recall, some time ago, the president made mention of the fact that the true value of the cedi is within a certain range. And so that actually, in a way, provoked some level of speculation in the market, because, I mean, the Abochi guys were thinking that, hey, if the government is projecting the cedi to stabilize within a certain rate, then let me quickly release it or let me hold it. And that actually, fuels some level of speculation within the market. Now, the surge in prices of gold, as I did indicate earlier, we started 2025 with an ounce of gold at 2,600. Then by the end of the year, gold was trading at spot around 4,300.
Yeah.
And currently, we are doing about a little over 5,000. The fundamental question that we need to ask ourselves is, what are the factors that are actually driving the surge in price of gold? And those factors, are they good for emerging markets like Ghana? Now, if you realize that recently most central banks are diversifying their reserve base.
Yeah.
So what they are doing is that instead of them keeping dollars in their vaults to stabilize their various currency, they are actually buying gold for reserve. And even here in Ghana, we have such a program, Gold for Reserve. And so a lot of the central banks across the world, most especially in emerging markets, are actually stocking gold in order to, use that to diversify their reserve base. Another factor that is actually pushing the price of gold upwards has to do with the fact that most investors want to hedge against inflation. And so when you have dollars now and the dollar is not doing quite well, what it means is that the purchasing power will reduce. However, we did indicate earlier that gold is one of those commodities that are resistant to geopolitical tensions, and also as a tool for hedging against inflation. And so these are some of the factors that are actually, driving the surge in gold. Now, the question is it good for us as a country? Yes, it is good. Are we those who are saying that, we should be adding value to the gold? So to the extent that the price is even gold, we should rather focus more on adding value to the gold and export. I think that to the extent that the prices are doing very well, we should continue to export as much as we can, because a time will come when the geopolitical tensions have settled, or the war between Russia and Ukraine has been settled. I mean, what will happen is that prices of these commodities will come down significantly, and that may affect us in the medium term. And so to the extent that the prices are good now, we take advantage of them, we build the reserve in order to support our currency.
But if you're building a reserve now that the prices are high, aren't you also risking losses when it finally falls?
Well, that is why I'm saying that. That is why the diversification comes in here. At the end of the day, you will not say, I will not export because I expect prices to fall. No. I mean, to the extent that prices are surging, we actually projected that prices of gold may end up hitting about $6,000 an ounce in the medium term. And even if we maintain the volume that we exported last year, it means that our margin will also go up. So I think that we should take advantage of it and export as much as we can in order to rake in the needed. One thing I want to add is that because the cedi is doing very well, remittances will be affected. And remittances is one of the sources through which you can build your reserve. And so when, the burger in America realized that now $1 is about 10 Ghana cedis, he will be demotivated to send something back home. So there will be some trade-off here and there, because we may lose on the remittances, but we need to export more gold in order to, somebody say, balance the equation.
Now, Doc, you've spoken also about the value addition bit of things. We heard the Gold Board announce recently a strategic partnership to begin refining gold in the country. It's hoping to start with about a ton a month and increase it to about 52,000 kilograms. Do you see this as the game changer that could change the financial position of the Gold Board from this lost conversation that came up last year?
Obviously. You cannot talk about value addition and you see a government taking a step and you will say that it's a bad move. I mean, any move to add value to our extractive product I think it's a good one, and we should. I'm sure that there are plans to expand and increase from the quantity they are doing on a monthly basis. So added value it has been, and I'm thinking that government should replicate this across the various products that we have. Let me also chip in this. Government was intending to revise, is it the Royalties Act, or they submitted something which they recalled, and especially on the lithium, and they said they were doing a comprehensive review. I think giving a base royalties, a royalty rate, and adding a variable should the market becomes good, it's a good call. And like in this time that many large-scale gold manufacturing companies may be cashing in, if we had a variable rate or an add-on, should the price go beyond a certain range, then we also stand to benefit not from direct participation, but also from the royalties. So we should have a comprehensive debate. Even if you look at the lithium argument, you will realize that lithium price has also been on the surge and is going up. The previous government negotiated for, I think, about 10%, and in the initial proposal, the government was trying to reduce it back to 5%. I am thinking that we should rather put it at the 10%, and rather also negotiate, to have an additional add-on, because especially for lithium, the price is likely, per the forecast, the prices of these commodities are likely to surge upwards. So we'll gain from two angles, from royalties and also from our direct participation. And all these products, we should not only look at the raw export, they should learn from the refinery that Gold Board is setting up. And if the lithium agreement is going to kick in, if we read extensively the FSS, the feasibility study survey that was submitted by the company, there are plans to establish a certain plans to process byproduct and other aspects of the lithium extraction that will create jobs, and that will also let us have an add-on value and export to get a higher value. So we should read to our extractive sectors. And one thing is that we should come to a point to agree that Ghana, what we have are these extractive sectors. Let's learn from Dubai. Let's learn from these Arabs. They had oil. Some 50 years ago or 70 years ago, those countries were as poor as us, and they took a deliberate decision that they will mine the oil and invest it in hospitality and other areas. Now, many Ghanaians go to these countries for holidays and all that. Why not learning from that example and using the proceeds from gold, from manganese, from bauxite, from lithium, trying to invest in some areas that in some time to come, even if the gold is no longer there, we have something to fall on. And you see, if you go to the villages that started mining gold, like Kede and Ko, if you go to those communities, now there's no more gold. And they don't have land. Their lands are not yielding. So the gold is gone. The land that they gave it for those manganese and those bauxite, the lands are also gone. So the people literally don't have anything. We've been mining gold in Obuasi for years, but when you go to Obuasi, you don't see that this is a place that we mine gold from. Nothing shows.
Okay.
So we should be mindful and learn from the other examples that we have.
Sure, Doc. Doc, let me put you on the spot straight up. So, yes or no? Gold Board's refining of gold would mean they will end this year without losses in their books. Yes or no?
I don't think I can speak for them. I cannot speak for Gold. You can't put me on the spot.
But do you see at least a significant improvement in their financial operations with this refinery thing?
Yeah. I see a significant. Like Tor, you can even connect it to Tor. We have to spend so much money to take it to Nigeria to refine. If Tor is working well, it's saving us some forex exchange, that we are refining locally. So what Gold Board is doing, it only is implemented or executed well, I think we will benefit so much from this.
Okay, we have to go, gentlemen, but then just your quick thoughts on policy rate. We know the committee is meeting today. I'll talk to you, Nelson, and Doc, I'll come to you briefly. Your final thoughts and what you make of the policy rate conversation. The governor is already urging about cautious optimism, saying that he doesn't expect us to rush anything, but stabilize the gains we've made. Where do you sit?
Well, if you look at the tone of the governor right from the onset, I think he's fixated on a single-digit lending rate. And to the extent that the governor is fixated on that, because I heard him in the media saying that banks should be ready to lend a single digit, which means that at the end of this meeting, if there is going to be any rate cut, we expect the rate cut to be down by some 350 basis points for the beginning of the year. And as and when the temperature of the economy heats up, maybe they can revise it upwards.
All right, Doc, what about you?
Inflation, the treasury bill, if the numbers are true, then the rate should go down significantly.
To what extent?
No, I've always advocated for a drastic reduction in the policy rate. And maybe about 400 to 500 basis points should do. If the numbers, unless we don't trust them.
Okay.
But
So
if the numbers are telling us the truth, then it should go down by that margin.
Up to 500 basis points. That brings it to about 10%.
Exactly.
Policy rate to about 10%. Quite audacious, I must say. But thank you so much, gentlemen, for joining us. That'll be all for today's edition of Business Focus. Thank you so much, Nelson Kudjo-Kwagbeji, finance and tax analyst with Melbourne Capital. Also, Dr. Boakye Yadom, financial economist with the University of Professional Studies. Thank you, gentlemen, so much for joining us. That'll be all for today's edition of Business Focus. For more stories, please visit our website, s3news.com/business. I am Michael Obudu. Thank you for watching. As always, please stay safe and catch you next week. Thank you.
Business